It's just money. It's made up. Pieces of paper with pictures on it so we don't have to kill each other just to get something to eat. It's not wrong, and it's certainly no different today than it's ever been. 1901, 07, 29, 1937, 1974, 1987, Jesus, 92, 97, 2000, and whatever we want to call this. It's all just the same thing over and over. We can't help ourselves. We just react. And we make a lot of money if we get it right.
Welcome to Market Makers, everybody. Your home for tomorrow's TA today. Often imitated, never replicated. All the fathers out there, hope you had a fantastic Father's Day weekend. Spent my weekend with my daughter. It was a lot of fun. Last week, we had some key bullet points happen. Key bullet points on our checklist of what drives the market. We had Powell on Wednesday, the FOMC decision. We had the CPI the same day. The CPI came in cooler as the Fed expected. Market got excited. Market went up some more, and Powell tried to say nothing at his presser. He literally tried to say nothing. Now, the biggest takeaway for me at that presser was we got the summary of economic projections, and the Fed went from 3 rate cuts for 2024 to 1 rate cut. The market did not care. But guys, you saw the title of this video. You saw the thumbnail. Why are we talking about summer tops? Do you guys know the answer why we are talking about summer tops? Lee, do you know the answer why I am talking about a summer top?
I'm autistic as shit.
Well, that may be true, but we are talking about a summer top that is incoming, that is forming, because we have key divergences in the market. And here's a key data point that you guys may not be aware of, especially if you get your news from the business media or from YouTube. The last 5 years in a row, the S&P has made a top in the summer and sold off. The average drop in the summer sell-off was 10.5%. I'm going to show this to you in the charts. Very key data point. When you have the RSP, the equal weighted S&P making lower highs below the 50, the Russell lost to 50, the European markets lost to 50, the Dow lost to 50. The only two assets, the only two indices above the 50 are the NASDAQ as well as the S&P. And we have key divergences happening right now. Right now in the S&P, you hear all these money managers talk about breadth. Oh, I think breadth's going to be expanding, Bob. This is a great time to buy. Do you know how many of the S&P companies are above the 20? Not even the 50, the 20-day simple moving average. 1/3 of the S&P is above the 20. Less than half of the NASDAQ is above the 20. As a matter of fact, all of the gains in the marketplace, 82% of the gains in 2024 are driven by 5 companies. Lose that 10 company noise that you hear on TV. 5 companies are responsible for 82% of the gains. You don't have to take it from me. Let's take it from a Wall Street guy. Let's take it from the Kronk. Lee, I need the Kronk. Guys, 1-minute video. Talk to you on the other side.
What did you make of that opening exchange? Are you with us?
I'm with you 100%. I mean, so everybody knows the concentrated returns. I just ran the numbers yesterday. If you look at just the top 5 names, right, not the top 10, top 5, they're driving about 82% of the index, 13 to 14% year-to-date return. So strip that out, you're up maybe 2-3% year-to-date on the broad, level. But maybe what's more important is when you look at those names, the top 5, 10 names, the correlations are as high as they've been since August of 1997, right? So what's that tell you? It tells you that people are chasing, right? They're chasing those winners and continuing to feed into it. And to Lisa's very good point, if you take the NASDAQ 100 against the Russell 2000, so tech against small cap, 5-year wides, right? I mean, we're at the widest level we've been. So, small cap continues to underperform, not surprisingly. I keep getting asked every conference room I go into, every meeting, when's it time to buy small cap? When's it time to buy small cap? And I keep saying, not yet, not yet, not yet, right?
When is the time?
The Russell 2 probably needs to be somewhere in the 1800s, maybe even 1700s before I think you get a compelling risk-reward flip there that makes sense, but nowhere here above 2000.
Daryl Kronk, Wells Fargo, 82% of the gains, the most concentrated market rally since 1997. Five companies driving this market. Why is this important to know? Because as the companies fall below their key moving averages, as those companies sell off, it's like termites eating away at the marketplace. The big boys will eventually capitulate, and that's how we get our pull down. Want to trade that pull down, and then I want to buy the bottom, because unless we get a black swan event, we're going to get that rubber band launch back to the upside, get that last and final third leg up, and it's going to be epic. But first, the market has to refuel the race car. I'm going to show you this in the charts, guys, because what does that mean for Bitcoin? That means thousands and thousands of points on Bitcoin, hundreds and hundreds of points on the S&P. This will be a very fun summer to be in some trades. Without further ado, Lee, let's start the show. All right, guys, if you want to support this channel, if you want to trade these markets, check out Bitunix. If you want to trade the crypto markets, one of the last remaining unicorn exchanges, no VPN, no KYC, trade anonymously with only an email. That link is in the video description. I'll pin it in the YouTube comments, as well as SimpleFX, a fantastic exchange available to most countries around the world. Trade equities, commodities, Forex, and a handful of cryptos. Guys, you want to hang out with me, you want to meet the staff, you want to meet our fantastic community, you can join our Discord. That link is in the video description, and you can message Lee on our Telegram there as well if you have any questions about joining. Let's go ahead and jump into this. So we got a little bit of a breakout happening right now in the marketplace, but I want to show you on a focus first on the summer tops. You guys have seen this one many times. We are on the ES. This is the futures for the S&P. So if we look at July 23, we rallied all the way to late July 27th, bottomed in October, 512 point drop, 11% move. My entry up here on the Discord was 45.92 for this move. If we back it up even further, let's go to 2022. We rallied into August. Again, these are the summer tops, guys. We rallied into August, sold off 19%. 825 points. What about 2021? On this meteoric rise up, right after the pandemic, we had a series of smaller retracements over and over throughout the summer. 5%, 3%, 3.66%, 3%. Could this be what's in store for us on this leg up? Could be. I think we're going to build a top. I think we're going to have a deeper retracement based on the divergences in the market, based on what's happening around the world. But let's back up even further. What about after the recovery from the pandemic? This is 0% interest rates. This is the market getting liquidity pumped into it. We had a 10% drop in June. Starting in June, a 9.5% drop, 307 points. If we go back even further to 2019, we rallied up to July. So you see these tops over and over again. June, July, August. The average drop, this was an 8.38% drop, 253 points. The average drop, the key takeaway here, guys, is 10.5% for a summer top. So what we're doing is tracking price action right now, understanding these key divergences, because we can look at our market breadth indicator. This is set to the 20. The 20 on the S&P right now. So right now, only 32% of the companies are above their 20. Out of 500 companies, less than 1/3 are above the 20 simple moving average. Now, if you look at these waves, guys, this is important. Look at these waves as you come up to build these tops, right? Here's our top in April 2024. Look how many stocks were above their 20 simple moving average, 84%. If you go back to some of these other tops, look at this top from last year, the July top. We had 84%, even higher just before, 85%. above the 20, right now less than 1/3. And you see this repeated over and over. We made this major top here when we had 92% of the S&P above the 20. So again, now that we're down to the 5 companies, responsible for 82% of the gains, we can continue to grind higher, but we are going to find resistance and we are going to make a top. And I do believe we are going to see a substantial retracement. And you're 50. Let's go ahead and jump to the contract. We had contract rollover, guys. So you're on the September contracts now on the futures for the S&P. But when you look at this, we're at 55.33. Now, if you notice, 1618 is at 56.19. This is being measured off this running W pattern right here, right? So we have this running W pattern. Could we get up to 56.19? It's less than 100 points away. Again, it's possible. If these 5 companies want to keep grinding, you're going to see the S&P move up. Let's get some other Fibonacci targets potentially here. We can measure this W here at the midpoint from the May 23rd candle down to that corrective low that bounced off the 50. And you can see you're right at the 1618, 55.31. You're at 55.33. So is it possible that we find resistance where we're at slightly above? Again, there's that 55.93. So when you look at this, the 2-fib 200% expansion from the midpoint of the W up is 55.93. And this lines up really closely with the 1618 from this larger measurement of the W. You can see the 1618, 56.19. So if we continue to grind up, 5600 seems like your target on the S&P futures. Do you see that? But if we find resistance before that, namely where we are at right now, 55.31 is the 1618. So we could see something like this. But overall, what we're looking for in the market, just to be clear, we're looking for resistance to hold. If it's at 5,600, that's where it's at. You'll see a move down, your wave pattern, right? You'll see a move down and a move back up. And this is a 3-wave pattern for a double top. Polar fib, 618, 786 is my ideal entry point. Looking for that entry for the 3-wave double top, and then you start your descent, okay? That's what I'm looking for these rallies to hit resistance, fail at resistance, retrace, and then re-challenge resistance, and that's where I'm taking my risk on the marketplace. But I feel very comfortable knowing unless we see a spike up in market breadth, knowing that less than 1/3 of the companies in the S&P are above their 20. So this is something we want to watch. 55.31, good point for resistance right now. We got a couple dollars above it. If we break out above this, guys, watch 5,600. That's only 60 points away. So we'll see if we can get up to that level. We could get there this week. Remember, OPEX is at the end of this week, and then we have earnings starting later this month, right? So lots of catalysts still remain in the market. Going to watch this region. If we jump forward to the equal weight for the S&P, this is the RSP, this is the ETF. Here's your 50. You're trying to pump back above your 50. You're a couple dollars or $1 above it right now. So this is where your challenge is. As the S&P is sitting at a new all-time high, you have a series of lower highs on the equal weight, valuing all the S&P companies equally, including NVIDIA, right? Valuing them all equally, this is sitting just at the 50, fighting the 50 today. We'll see if it ends up selling back off below it or if you can get more of a catalyst to your upside. But let's go ahead and continue looking at the September contract here for the Dow. Here's your 50, and that's sitting at 39,282. Again, this is what I expect the S&P and the NASDAQ to do is fall back down to at least the 50, okay? So you could see, we'll see how this plays out here on the Dow, but you could see this 3-wave pattern form here. There's your sell-off. This is your bounce back up. You could challenge the 50. You could break above the 50. We'll see if you can find resistance here. And again, all we're doing here, looking at this a couple different ways. You can pull a fib from up here, your fractal high, or your current fractal high in a more narrow range. You're at the 50% retracement, 39,154, and you have the 618 at 39,261, 786 at 39,413. This is the immediate range I'd want to watch. Obviously, if the S&P and NASDAQ continue to grind higher, you could see the Dow also push higher. If you start falling below 38.5, watch your neckline of your massive 3-wave double top down here at 37,880. And at that point, you'll be coming down to your 200 on the Dow. Remember, the Dow is the baby brother of the S&P, representing all the same sectors, but it doesn't have that AI catalyst that retail is foaming at the mouth over right now, throwing money at. So we want to watch to see if you get a 3-wave pattern, or if this ends up being a W pattern for a market reversal to the upside, right? Because we can get targets off of this. But to do that, you got to get above the 50. You got to break these fractals right around that 39.6 level, okay, to break out to the upside. If we look at the NQ, this is a September contract. So 20,145. You're pumping. You're pumping up right now in the NQ, but let's get some targets off of this. Again, we have the same exact patterns presenting. Here's your larger running W pattern, right? There's your larger running W pattern. You have your smaller W that was down here. So let's go ahead and pull this target here with the Fibonacci retracement from this fractal high, 21st of March, down to your corrective low. We can look at our 2 fib is at 20,525. Remember, we had contract rollover, so we had a gap up, right? So 20,525 is the 2 fib. You're at 20,151. The NASDAQ can gain about 200, 300 points a day, especially in an uptrend. So you're basically 2 days away from 20,525. Let's see if we can find confluence with that level. What if we take the midpoint? Here's your larger running W, right? So here's your running W. Let's take this midpoint right here and measure this and see what we get from a Fibonacci perspective. So I'm going to go ahead and measure this, pull this down. Again, we had that 20,525. And now look at this from the smaller fib pool. You have 20,525 right on top of that, the 2618 and the 200% retracement from the smaller W and from the midpoint of the W and from the larger W pattern are right on top of each other. So I expect good resistance on the NQ, 20,525. Again, 350 points away from where we are now. What's good resistance mean? Good resistance means we should see a test, we should see a sell-off, and then a retest, hopefully a lower high to give us a kill box to trade from at the 786, and then see this breakdown if that's where the markets decide to top. Timing-wise, guys, again, we have earnings coming up, different catalysts in the market. So we're just watching this, waiting for a resistance level to hold, because I think we're going to get that summer retracement. So that's the uptrend we have right now in the NQ. If we look at the Russell's a different story. You are below the 50 still here on the Russell. You do have, as we talked about every video, if you start breaking to the upside, if the markets just keep grinding with those 5 stocks or get a parabolic lift off, the peak, if the blow off top starts this summer and we don't get a summer top and drop and you get the blow off top really igniting this summer, you could see this W pattern form. And then you want to see the Russell take out 2152, which it's only challenged once in the last few years. Okay. And then you failed from it. I don't personally think that's going to happen again because of that divergence we have with the amount of stocks that are below the 20, below the 50. It is not a very strong rally. It's a very narrow breath rally. Again, the most narrow breath rally since 1997. So could it grind higher? It could, but I expect all these key resistances to potentially hold. So you want to watch the 50-day moving average on the Russell right around 2045 here. See if that holds up. See if you start making perhaps a smaller 3-wave top, right? A smaller 3-wave top for a failure point. And I'd be looking at this in confluence with what the other markets are doing. Because as you guys know, we talked about this last time, the Russell has a left shoulder, it has a head, it has a right shoulder. So you have a head and shoulders 5-wave pattern. You have a W pattern trying to form. But for this to break out, you got to take out that midpoint fractal right up here at 2132, and you're sitting right at that key support level of 2000. You're at 2016 right now at the time of recording. So you want to watch that. What about Bitcoin? Bitcoin, again, we've had this massive 3-wave double top on a 3-day time frame, and you can see you've been floating, right? We've been over Bitcoin so many times, but the key points here is if you do see a steeper sell-off in the market, we'll look at this on the daily, but if you do see a steeper sell-off in the market, you want to watch 56.5 because we've had these targets for many, many weeks now. But if you break this neckline at 56.5 from this ABC three-wave pattern, if you break this neckline, we have 52.8 right down here. And then we have the mid 40s down here lower if the sell-off is steeper. If there is no sell-off, if we're in summer blow-off and we're going to rally into the fall to the fall equinox, right? Then what you're looking at is a giant W reversal to the upside. Either way, there's key points that have to get taken out. You got to take out the midpoint of that W, which is why we're going to look in the daily. Remember the 71,850? We talk about video after video. You got to break that fractal and ultimately break your all-time high at your A point at 74K to continue more to the upside. So let's go ahead and look at that on the daily. Right now, you're below the 50 on Bitcoin as well. You just wick below it, trying to come back up above it. And this is the same killer point in the market for Bitcoin, 71,850, 71,850, 71,850 over and over again. Here's your all-time high up here, 73,850. But this is the killer point in the market. If we want to see this W, you want to see this W reverse and go to the upside, get back above the 50, break out to the above 7150. And if you take out your all-time high, we're going up to those higher level targets, guys. So we've been over those targets. Remember, ultimately, the path that I see for Bitcoin is we make our summer tops, we get this drawdown, we get this retracement. And if we get the retracement, we slingshot back to the upside. My upside target for the end of this cycle is 110K. We've been talking about that for months now on this channel. But to get to those levels, you need to break these key levels, 71,850, 73,850. And ultimately, if the markets top with the narrow breadth, if those 5 stocks stop rallying, stop grinding higher, you're going to see Bitcoin break down, and we're going to need to watch those lower level targets. Remember, this is a bullish action we're talking about, okay? If Bitcoin sells off, you're stretching the rubber band, whether you come back to 52 or come back to the mid 40s. This allows you to base, to form a new pattern, a new W pattern, and lift off, take out your previous highs and move back to the upside for that, what I believe would be the final leg in the market for the end of cycle rally. And again, if this is starting now, if this FOMO blow off is starting now here in the summer, I personally don't see it carrying with just the 5 companies carrying so much weight. I think they're going to hit a top and want to retrace. So that's my bias. But if this was starting now, you know the levels you have to watch. You got to watch 71,850, 73,850, break those levels to break out to the upside. Let's go ahead and move forward. Well, actually, let's look at the indicators real quick on Bitcoin. MFI is bearish on the daily. Momentum flipped back to bearish, but that's because, of course, you had the sell-off since the CPI, right? You had your rally, you sold back off, you're struggling with the 50-day moving average. What about our altcoins that we're tracking? What about Solana? Again, Solana has presented some great trades. When you zoom out on this, let's just put it on a 3-day chart real quick. When you zoom out on Solana here on the 3-day chart, you can clearly see you have this giant 3-wave double top, right? So you have your 3-wave double top. Here's your peak, right? We got these trades on Solana, but the 205 level up here, nice 40% plus drop we talked about on the channel. And of course, we came back up, but you have the W structure, right? All these markets, if they can find their bottom, they can reverse with the W. The M can become a W, and this can break out to the upside, but you got to break above 189. You got to break above 210 to come to that upside. And if you can get to that upside, you have 236 and 270. I think we're going to get to those numbers, but I think these levels are breaking first to the downside after these 5 stocks run out of gas. So where would Solana go to the downside? Well, if you lose 113, I'm looking at that $92 level, which puts you back here. And if you come down to the 1618, you're looking at $66. So what we want to do is watch these levels, right? Watch these levels, because if Bitcoin gets a little pop, tries to re-challenge 71,850, if it fails again, you could see Solana also want to re-challenge another level and present a potential trade, okay? But if all the markets start shifting up higher with the S&P and NASDAQ, if the S&P and NASDAQ can reverse all the markets and get them grinding higher, you could see the cryptos move higher with them as well. So you always want to watch these breakout levels to the upside upside and to the downside and understand the picture in the marketplace for what's going on right now. Ethereum, again, big three-wave double top. We're not going to draw it this time. We found resistance just above 39.11. We sold back off. You have a smaller top that's forming right here, as you can see. If this starts capitulating below 33.62, price right now is 35.18, then you want to watch these lower levels, your 31.50 level, your 3,000 level, because that's back in this cluster of candles. Key area to hold. Obviously, if you lose that, then you're coming down deeper. We're not there yet. But if you want to see this reverse, right, because again, you have the W forming here. If you want to see this reverse back to the upside, you need to take out the 39.11, 39.78 range, break out to the upside, then you can have those targets back above 4,000, right? Back above 4,000. You're sitting here at 35.20, and we will know soon. We have that catalyst with the earnings in a couple of weeks. We'll see what the equity markets do, if they start topping, if they start waving down, waving up, and we'll be able to track all this. All right, let's take a look at the DAX. The DAX, another major market below the 50, right? Below the 50, we had our key W pattern form here. We broke out to the upside. Classic example of a false break, three-wave double top, right? Here's your second top. Here's your break, became a false break. Why? Because you broke out above your previous all-time high, but then you sold off 1,000 points. So this is where you're at right now in the DAX, below the 50. This looks very similar to the Dow, by the way. And you're sitting here, you're kind of floating today, retesting the base of this structure. You want to see the DAX hold support here. It needs to get back above 18,150. If we pull a fib from your all-time high down to that low, you really need to get back above the 18,615, 18,793, and start this process where you can wave back to the upside, find some support and wave back to the upside. What do I think is going to happen? I think you could retest the 50. This is going to be a really key area up here around the 18.5 to 18.8 range. Retest the 50, see if you fail once again at resistance, but really you need to hold this support as well, because if you come down below this neckline at 17.6, then you need to watch your December 2023 highs, and that's down here at 17K, because that's where the DAX would be heading. But I would expect a wave up potentially to re-challenge the 50, that range, and then see what happens with the contact there. If we look at the FTSE, we can see the FTSE hit our nice 618 target here. We had a rally up, sold back off, rallied back to the 618, got above it, and then sold back off. You're sitting at support at 81.51. You're below the 50, okay? Common theme in the global markets. You're below the 50. If you can rally back up, then you want to look at these higher levels, 82.61, 83.50, where you failed before at this arrow. If you start dropping where you're at now and you start getting below this 81.21 level, then watch 8,000, because that's your next fractal level market structure support. So maybe you can get a wave up, try to challenge something, see if you fail once again and come back down. We'll see what happens, because it all is going to depend, in my opinion, how much further the S&P and the NASDAQ can grind based on those 5 companies. Will that top come soon? I know we've had that summer top 5 years in a row based on market history. That's what I'm looking for. Keep that in your mind when you're looking at the other markets and deciding what to trade and what to wait on. Guys, I hope you have a fantastic week. Join me on the next market update. Please do like and subscribe. I answer your comments as always. Hope to see you all on the Discord. Take care, everybody.